Just a few years ago, many people laughed at the idea of cryptocurrency becoming a serious part of the financial world. Today, some of the smartest investors, major institutions, and even governments are paying attention. So what changed? Why are experienced investors moving a portion of their money into digital assets in 2026, despite the volatility and risks? Is this the beginning of a major financial shift? Or are people simply chasing the next big opportunity? The answer is more complicated than most headlines suggest. Today we will talk about why smart people are moving their money into crypto in 2026. So before we get started, make sure to hit that like button, also subscribe to my channel. 10. The search for a new financial opportunity in 2026. A growing number of investors are paying closer attention to cryptocurrency as part of their overall financial strategy. It is not because they believe it is a guaranteed path to instant wealth, but because they see digital assets as a new technology, with the potential to change how money, ownership, and online financial systems operate. While many people still view cryptocurrency as a risky trend, experienced investors are studying its long-term possibilities. They understand that every major financial innovation, from the internet to mobile technology, was once considered uncertain. 9. They understand the power of limited supply. One of the biggest reasons some investors are interested in certain cryptocurrencies is the idea of limited supply. Unlike traditional currencies that can have their supply expanded by central banks, some digital assets have a fixed maximum number of units that can ever exist. Supporters believe that scarcity may make these assets attractive as a store of value, especially during periods when people are concerned about the purchasing power of traditional money. 8. They are looking beyond short-term price movements. Many new investors enter cryptocurrency focused only on daily price changes. They watch charts every hour, react to every headline, and make emotional decisions based on fear or excitement. More experienced investors often take a different approach. They focus on understanding the technology, the use cases, the development behind projects, and the possible role digital assets may play in the future economy. 7. Diversification is changing the way people invest. For many years, traditional portfolios were built around assets like stocks, bonds, and real estate. In 2026, some investors are adding a small allocation of cryptocurrency as a way to diversify their portfolios and gain exposure to a different type of asset. This does not mean moving all of their money into crypto. In fact, many experienced investors focus on managing risk by balancing different investments. 6. Technology is creating new financial possibilities. The technology behind cryptocurrencies, known as blockchain, has introduced new ideas about how digital transactions, ownership records, and decentralized applications can function. Many investors are interested not only in the price of cryptocurrencies, but also in the broader technology and businesses being built around these systems. 5. Institutional interest has changed the conversation. One major change in the cryptocurrency world has been the increasing attention from large financial companies, investment funds, and other institutions. As more established organizations study or participate in digital asset markets, some investors see this as a sign that cryptocurrency is becoming a more recognized part of the financial system. However, institutional involvement does not remove the risks. 4. They are thinking about the future of money. Some investors believe that the world is moving toward a more digital financial system. Online payments, digital wallets, and internet-based financial services have become a normal part of everyday life. Cryptocurrency represents one possible development in this broader digital transformation. 3. They focus on education before investment. One of the biggest differences between successful investors and those who lose money is knowledge. Many people enter the crypto market because they hear stories of others making huge profits. They buy assets they do not understand and panic when prices drop. More careful investors spend time learning about blockchain, token economics, security practices, market risks, and the reasons a project exists before putting their money into it. 2. They know risk management matters more than excitement. Cryptocurrency has created significant gains for some investors, but it has also created substantial losses for others. The smartest investors recognize that protecting their money is just as important as growing it. They avoid investing money they cannot afford to lose, avoid making decisions based purely on social media trends, and consider how cryptocurrency fits into their broader financial plans. 1. They are investing in a long-term vision. The biggest reason some smart investors are moving part of their money into cryptocurrency in 2026 is not because they expect to become rich overnight. It is because they believe digital assets and blockchain technology may become a larger part of the future financial system. Whether that vision becomes fully successful remains uncertain. But these investors are willing to study the opportunity, accept the risks, and take measured positions based on their own research and financial situations. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.